ETF Trends joins us. Obviously, when we talk about ETFs, we think about all the inflows that have happened over the pandemic, the excitement of thematic ETFs, and just a different way to invest. So much popularity in the last few years. Now what? Where do we stand? Where do ETFs stand?
Hi, Nicole. Yeah, it's a quite different start to the year, where we almost hit $1 trillion in new ETF flows last year. We're on pace for about 700 billion right now. But when you look at the tape, it's quite different. We're actually seeing negative flows in the fixed income area, more people selling than actually buying. And it makes total sense as there's more concern in the advisor community than ever about inflation and the potential for rising interest rates. On the equity side, the real surprising thing is investors are almost buying as much equity ETFs outside the US as they are inside the US, as many are looking for value opportunities, diversification, and that type of thing. But I think the biggest surprise is we saw net outflows last year in commodities. So far, year to date, we've actually seen $6 billion come in as more and more people are diversifying away from equities and away from fixed income and trying to hedge for inflation.
It really is unbelievable how ETFs have taken over, but to your point, getting out of some that they think may have either just not that much payback, such as fixed income, or just spreading out the risk, going abroad. Another theme that you saw for sure was crypto. Tell me a little bit about some of the Bitcoin ETFs that you're watching so closely. Is there a lot of enthusiasm? How do you quantify it?
Yeah, it was exciting for the ETF market. The ETF fans had been waiting for many years for crypto-based ETF strategies, and they are now strategies. They don't actually have the Bitcoin coins themselves. They're actually futures-based. And there was a lot of momentum out of the gates. BITO, which was the first Bitcoin strategy ETF, got $1 billion in a matter of days. However, as demand for crypto waned, we also saw demand for crypto ETFs wane a little bit. However, long term, fingers crossed that the SEC and Chairman Gensler finds it in his heart and in his mind that crypto's not going away, and that there are some ETFs that are based on the crypto coins themselves as opposed to futures. Jury's still out at whether we'll see that this year. A lot of people don't think that we'll see that until probably 23.
What do you like?
So right now, there's been a lot of discussion about commodities. And what's interesting, Nicole, is it tends to be in the past that gold was the great commodity hedge. Gold, unfortunately, has been the worst performing commodities sector. So if you look to areas like PDBC, which is a broad-based commodity basket, it's got some energy, it's got some agriculture, it's got some real estate. Yes, it's got some metals as well, but not just gold. It's got some base metals. That's something to consider. The other thing that's really interesting is advisors have shifted away from a traditional 60-40 portfolio because they're just not comfortable investing in bonds in a rising rate environment and shifting more towards 70-30 or even 80-20, with the idea that some of that allocation is going to go into dividend-paying stocks, and there are a lot of good ETFs in that area. The big surprise, I think, is the ETF industry continues to evolve, and there's some income-enhanced strategies like Nationwide's Newsy, NUSI, or JP Morgan's JEPI, which you get a base index surrounded by an options overlay strategy that's kicking off a 7 or 8% yield, and in many cases, that can be a tax-free yield. So look for more of that to come as everyone's looking for income and also hedging capabilities as well.
Wonderful to see you, Tom. Thank you for that. We appreciate it.
Good seeing you, Nicole.
Tom Lydon.